Hello, everybody. Welcome to this webinar brought to you by Bursa Malaysia and managed by our company LifeChamp. Our webinar title today is the 40-30-30 formula, a strategic approach to stock market investing. So my name is Shen Chu. I'm the moderator for this webinar. Now, are you someone who are often puzzled why the share price dropped so much, but there's nothing to do, there's no fundamental change with the business fundamental, and there's no change to the business growth prospect? Now, it's because that the change in the price movement is not merely influenced by the stock and the company itself, but is also influenced by other factors. So in these sessions, we're going to look into what are the other factors that are critical in moving the share prices and how we can develop a strategic approach towards that. Now, before we begin, as usual, disclaimer, whatever we share in this webinar is only for educational purpose. In no way that we give any recommendation for you to buy or sell any listed securities that we mention here. If you decide to make any investment decision, you're solely responsible for all your investment risk. Now, allow me to briefly introduce our speaker today. And she's a heavyweight and veteran in the industry. She worked in the semiconductor industry for 17 years, 5 years in AMD, 12 years in Intel, with the last role as Automation APAC Manager for Intel. She started trading in the Malaysian market part-time in 1992 and US market since 1997 and became a full-time trader in 2008. She's experienced in stocks, options, CFD, Forex, and futures. Her core approach is top-down from macro to industry to stocks, and she uses a combination of fundamental and technical analysis in her investment. Now, she's passionate in trading psychology, as she believes that money management and psychology contribute 90% of the success in achieving consistency investment and trading. And she founded Beyond Insights in October 2008, focusing on investment and trading education. She's none other than Miss Kathlyn Toh, who is a founder and chief trainer of Beyond Insights in Berhad. So, Kathlyn, good to see you here today. How are you?
Hi, Shane, and hi, everyone. Yeah, good to have so many of you attending the webinar today. Yes.
All right. So I'll just stop sharing my screen and hand over the control to you. We can't wait to learn from you about this strategic approach 40-30-30 formula.
Okay, great. So I'd like to have a more interactive session, although I cannot see you, unfortunately. I would like you to participate. So when I ask a question, I'd like you to type on the chat, right? So how many of you are excited to learn really how stock price move on a day-to-day basis? Type of me if you're excited to learn. Yeah, type of me, yeah. So we'll see how interactive are you, right? The more interactive are you, the more, I felt, more lively to share as well. Huh? Usually I like to see faces. Okay, great. Thanks for your participation. Yeah. So, and any one of you have attended my previous webinar on the related to price action versus the technical indicators? Yeah, so not sure how many of you were there as well. Okay, great. Okay, so tonight the topic is very different. So let me share my screen first. Before I move on, I'd like to start with a poll, right? So that I can get to understand you better. Okay, so this is let me share the objective of the session first, then I will do a poll. This session is actually an advanced topic, but I will do my best because I know in any of the webinar, we may not have everyone who have traded before, or even not everyone have that level of experience, but I'll do my best despite an advanced topic. I will explain in layman terms, so do give me feedback towards the end, right, whether you can understand, okay? This session is about understanding the key drivers of the stock market performance. So in my 31 years of trading, I have experienced many different approach, right, in terms of the stock market, all the way from like value investing to very active day trading to growth investing, swing and trend. And after exploring many methods, I realized that you don't have to trade everything. And one of the biggest discovery I have that I was very curious when I start, right? What really moves the stock price day to day? Especially, I like to study fundamentals of the company. Sometimes the great stocks doesn't move, a lousy stock move, right? How many of you have experienced that as well? Okay. So that kept me, curious to really understand this. And I wish that I knew this many years back, because it could make a huge difference, right, in the performance. And that's why I'm very passionate to share this. And I hope this will really, really shorten your learning curve. Later, I will share with you some of the great insights, of this discovery. Right, what moves stock price. The second part is aligned with the first one, is to explore a top-down approach to the financial market by leveraging on this, what I will share, 40-30-30. So one of the biggest mistakes that a lot of people make is, they start from bottoms up. That means they start from the company first. But by right, it should start from the tops down. Yeah. The third one is I will share with you the common mistakes that I have made, and also I guess many people has made as well when falling on the bottoms up. But what is the problem with doing bottoms up? And I will also be selecting some case studies to demonstrate this using Malaysia stock examples, right? And also tonight is a very special, there's a very special economic indicators, also one of the very major one called CPI announcement. Later, I will share with you the impact when there's such announcement. Yeah. Okay, so are you ready? Okay. So before we go on, I'd like Shane, can you help me to launch the poll on the
Sure.
experience level? Yeah. So I'd like every one of you to let us know what is your experience like, so I can tailor my approach to this presentation. Right, if on the question 3, if you traded anything outside of the 4, like if you put others, right, do type on the chat so at least I know what other countries market you trade. Okay. Okay. Terence, I'll need you to post the outcome to me because I forgot that I disabled the poll view on my Zoom. Yeah. Okay. Or maybe Shane can help share the results to me.
I need to end the poll before I can share the result.
Oh, okay. Okay. Yeah.
Okay. So right now we have 60% participation.
Okay. Okay. Let's see if I can just change the settings straight away.
Yeah. I think when you want to end the poll, I can share the result.
Okay. All right. Thanks.
Maybe we can wait for another half a minute.
All right. Yeah. So I'd like every one of you to respond to the poll if you have not.
Thanks, Maslan.
Okay, great.
All right, we have more than 70% participation already. So
All right.
I think
For those of you who joined late, please participate in the poll so I can tailor my approach to this presentation.
okay, looks like no
Okay.
more increment in the
Okay.
number of
All right.
participation. So I guess we can end the poll.
All right. Yeah.
Okay, let me share the results.
All right. Okay, now I can see it. Yeah, I managed to reset it. Can you see my screen as well on the poll result?
Yes, yes.
Okay. All right. All right, so we have 11% who have not traded. Yeah, so welcome to the stock market, right? For those of you who are new, the stock market is very interesting. So I'd like to encourage more new traders as well. So it looks like it's pretty even, okay? So it's going to be pretty challenging for me. I'll do my best to tailor to those of you who are completely new and those of you who are, pretty seasoned. For those of you who are very new, like feel free to type on the chat later if I have mentioned any jargon that you don't understand, right? Don't need to feel shy because everyone is learning here as well. We have quite a mix of beginners, intermediate, advanced here. And majority have traded Malaysia, Singapore. Well, also 27% US, Hong Kong. All right. For those of you who traded others, can you type on the chat so we know what markets you trade? Right, the one who mentioned others. Yeah, please type on the chat. Okay, so let me start off. There are three sections here. The first part is on key drivers to stock market performance. Okay. So what really drives the stock market on a day-to-day basis? In the past, right, I was thinking that, the fundamentals of the company plays a great role. But let's say if the fundamentals of the company plays a great role, then how should the stock chart be? But before I share with you my experience on this, I'd like you to participate. What do you think drives the stock market movement on a day-to-day basis? Yeah, just type on the chat. What moves stock price? Every day stock price move, right? So what really moves them day to day? Rumors, profit, sentiment, news. Okay, let me put it here. Demand and supply. Okay, news. Pump and dump by some. Okay, EPS. All right, thanks for your participation. Very good. Desperate to buy, desperate to sell. Human emotions. QR. Yeah, what do you mean by QR? Okay. I know QE, but I wonder what you mean by QR. Yeah, do type the full terms. Yeah. Market perceptions, supply and demand, quarterly results, smart money. Oh, quarterly report. Okay. Yeah. Okay. Good. Everyone has their own jargon, short terms. Yeah. Sentiment. Yes. All right. So yeah, that's very true. Very good participation. The keyword is actually sentiment. The question is what affects sentiment, right? What affects sentiment? Yeah. If the stock price actually moved by fundamental, right? Fundamental only change once a quarter, right? Which is the earnings result only come once a quarter. So if the stock price moved by earnings result, then the stock chart is going to be like this, right? Once a quarter it moves. Have you seen any stock chart like this? Stock price move once a quarter when the earnings announced, right? Let's say they lose money, then come down. Right? Anyone seen a stock chart like this? Yeah, of course not. So this is what I mean. If the company stock price goes by financial report, it will be like this. Okay? So this is where we need to understand stock price move. You may want to write this down as I share. Stock price does not move based on the financial results alone. Stock price move based on perception. Yeah, perception of the future. Right. So of course, let's say today they announce the result. There are times where the stock already moved before that, anticipating the good results. So if the good results came out, then people may sell because they already anticipate and the stock price already moved, right? So it is not about the actual right now. It's actually an adjustment to what they expect it to be before. Okay, what they expect before, and then they validate when the results announced. And so this is also the reason why the stock price doesn't go in step function, because before the result is announced, right? Let's say if this is the latest result, okay, if people anticipate this, the company will excel, then the stock price would have moved like this. Yeah, let me change the color first. Right, from here, the stock price would have moved up, anticipating the result will be good. Okay, so when the result is announced, some people may take profit. Right? Unless the result is better than expected, then it can continue to go higher. But if they miss the expectation, then it will come down. Understand? So before the announcement is out, the price already moved, anticipating what the results could be. Make sense? Yeah. So this is one of the important aspects. But of course, stock company is only one aspect of it, right? There are many more, which I would like to share with you right now. The first part, the 40% of the move is actually the overall market sentiment. But what affects overall market sentiment is actually the macro factors, right? But what are macro factors, right? Some of you did manage to highlight some. For example, you mentioned interest rates, foreign funds, and also result supply and demand. Yeah, so supply and demand is very important, right? Stock price don't move based on the actual fundamental data, because fundamental data only comes out once a quarter. So what moves is a daily buying and selling, supply and demand. Buying and selling is the one that moves the market. So a lot of times people look at opinion, right? So they will get too hung up with, oh, there will always be people who says the share market will go up, the share market will crash by end of the year, right? It's very important to differentiate between news versus opinion. Write this down. News over opinion. When I was new in the stock market, I was also very affected by opinion. You know, for example, let's say some so-called expert come out and say the market will crash, the economy is not going to do well. You may be having concern, right? Especially when you're new, you will be very fearful about it. How many of you have experienced that you read some bad news, right? Then you are very affected by it. You don't dare to buy it. Then the stock continue to go up. Anyone have experienced before? Type of me. Okay, that holds you back from buying the stock. Then you see it continue to climb up. Or when you see that the market is, there's a lot of great news, right? So normally when you see a lot of positive news, then a lot of people will want to join the stock market. But it's usually at what times where the stock market is cheaper? Is it when everyone is fearful, or when everyone is, what they call it, optimistic? Fearful or optimistic, they want to join the stock, where the price are cheaper. Fearful. But when there's fear, right, then people don't dare to buy. So I'm not saying that you just buy, like Warren Buffett say, you know, be greedy when people are fearful, right? And be fearful when people are greedy. But that doesn't mean that when everyone is fearful, you just buy, right? You have to, he don't say be, what I call it, just simply buy, right? You still need to know what you want to buy. And that's why it's very important to understand how the stock market really works, okay? So in this case, what I'd like to share with you in the next slide is actually what are the macro factors that drive the stock price. And those macro factors are the one that drives the buying and selling, right? It's not the news and it's not the opinion, okay? It is whether people take action on the news and the opinion that matter, right? Someone can say is, if you can see a bad news, but people can buy on bad news. Okay, this is what I'd like you to write down. People can buy on bad news because it's bad news when the market is down. Or people can sell on good news. Okay, let's say today, if they expect inflation to come down, right? And it actually come down. So by right, it should be good or bad news. Inflation come down should be good or bad news. What do you think? Inflation. Should be good news, right? So by right, stock should go up or go down? Should go up. Okay, so let me just show you the current stock chart in a short while. Okay, SPY. Let me show the inflation data right away. Right, so this is the CPI announcement that just happened September 11, 8:30 p.m. CPI year on year 2.5. Right, 2.5 is the actual. Forecast is 2.5. Last month is 2.9. Right, if I look at the graph here, you can see it drops. Right, it has been flat for a while, and last few months it drops, and it's actually dropped quite a lot from 2.9. Right, from 2.9 to 2.5. But this drop already expected. So this become a bit tricky, right? It's already expected. It come out like this, same. So per expectation. Let's look at the SPY right now. Okay, so this is the daily chart. This is the intraday chart. Right at the announcement here at 8:30 p.m. Can you see? It came down. Of course, now it's like E coming out. So it doesn't mean it's great news, so stock will go up. Understand? Yeah, so I always teach our students, it is not about the news. It's how the stock price react to the news that really matter. Like this could be also, because there could be many interpretation for this. And before market open, this yellow zone is the pre-market, yeah, pre-market. And the stock price already moved. 9:30 only is the US market open. So there could be many people which may treat this as positive or negative. It becomes not so straightforward interpretation right now. Inflation goes up, usually is bad if the Fed want to control. But inflation go down, by right, it should be good. Then the Federal Reserve would be more, I would say he will be more confident to reduce the interest rate because inflation is already down. Okay, but people are saying if drop too much, is it good or bad? Right, so this is a bit need you understanding of the macroeconomics. Drop too much can also mean purchasing power drop. People are not buying as much. Okay, then it become a bit tricky. So because there are a lot of differences opinion on an outcome, you will not know exactly whether as a whole, because there are millions of traders and investors and big funds in the world, right? There are big funds manager, there are also individual traders. As a collective buying and selling, what will be the ultimate direction? Understand? Yeah, so that's why we never assume. We anticipate most likely this is considered good news, taken as good news. However, right, you can see here, it could be down and up. When market open, the direction can change as well. Direction can change. So I need to look at the overall price action as a whole. Has this been factored in, right? As people already sell off earlier, anticipating that the inflation will come down, right? Or let's say, have the news been factored in and people already take action earlier. Let's say, example, right? If the CPI is lower, that means inflation drop, means good for stock market. And let's say the stock market was like this earlier, right? People expect the inflation to come down. So when the news come out, people may sell. They may sell on good news and take profit. All right. So don't trade just the outcome, right? Whether it's supposed to be good news or bad news. You trade the reaction to the news. And you also look at whether the market already rallied. But let's say the market came down first, right? The market came down first, maybe worried about the inflation, right? But then the inflation really come down, then it has more room to rally. Can understand so far? I know if you're totally new, you haven't traded the stock market, this will be too advanced for you, right? Yeah, just absorb whatever you can first. Okay, but now today's reaction could be a mix because yesterday there is a US presidential debate between Donald Trump and Kamala Harris, right? So the outcome could have a mix, not just because of inflation, also what they think about the debate as well. Okay, so this is not so straightforward. That's the reason why we need to look at the outcome closer to the market open. I can actually look at the pre-market to see what's the range like. Yeah. Okay, so right now, so let me come back to the slide first. Okay. So that's the first part, and in fact, 40% of stock price, okay, is a big movement. The next one is industry or sector trend, right? Example, I think a lot of you may have heard about a mega trend like AI, right? AI is just artificial intelligence, is just one of the mega trend. And these mega trends can move 30% of the stock price because the mega trend is the bigger picture that moves the industry trend below it, right? All the related industry to, let's say AI, right? There are a lot of ecosystem for AI. And that is the one that drives those companies that align to the industry. Okay, so this is 30% of the move. And only 30% is company-specific news, right? When I say company-specific, it could be whether the company performance is good, right? What is the profitability and the growth, right? Are they sustainable? Are they able to compete in the market in the same industry, right? So this is the 40, 30, and 30 that I meant. Okay, so in total, if you look at the top two, it's 70% of the move. So do you agree that, this is very important to understand? Because it's 70%. But where does people spend most of their time on? Right? A lot of people, they research the bottom part, which is the company. I'm not saying the company part is not important. Right? The question is, can you control the macro? Right? You cannot. Can you control the industry? You cannot. You can only study, research, and see which one is in favor. That's all. Right? Then you can choose stock aligned with that. But you cannot control the macro. You cannot control when the war is going to end, right? Or when there's a new war started, or how much is the tariff that, let's say, Donald Trump wanted to impose on China if he wins. Right? You won't know the exact amount, although he may say something. The actual implementation is actually quite complex, right? Yeah. So what we can do, we do what we can do. What we can do is we select strong fundamental stocks, right? So what I do is I select high growth stocks, right? Using my criteria. I select and stand by. I don't care whether it's expensive or cheap. My goal is to select great companies and when the sentiment is bad, okay, but not affecting this particular stock so much, right? It's not like affecting the fundamental of the stock. It's just pulled down because of sentiment. Then I will use the technical chart to confirm, then I buy the stock. So I will be always ready with a handful of great companies I want to buy, right? It's not that you don't do step number 3 at all. You must always have standby stock, right? Because sometimes you don't know when the big blip is going to happen. Later, I will show you the huge advantage. If you understand this, you could have buy a lot of the Malaysia stock during the temporary blip that happened recently. Okay. So the next question that a lot of people have is fundamental and technical analysis enough, right? From this, what I'm going to share with you here, do you think just looking at fundamental and technical analysis is good enough without understanding macro? What do you think? Given the percentage of stock price impact? Yes or no? Yeah. Okay. However, since a lot of you are new, right? Based on the research, about 10% of you have not traded. I don't want you to feel overwhelmed. Usually, when you're totally new, it's good to start from the company because the macro is advanced, right? Unless you are from economics background, okay, or you have started the business before, it's easier for you to understand. So even for our entry-level class, we start with company first. Yeah. Then as they get more advanced, then we can show them this. But we still highlight to them that's the 40 and 30 part. And one of the challenges that people have is, there's so much news, right? How do you interpret all this, right? People may understand the market sentiment is important, but if you don't know how to interpret the market sentiment, then it will become too confusing, or you may get affected by the day-to-day news. And then you don't have confidence at all to keep the stock overnight, right? Then you become intraday trader, right? So our goal here is to give you that understanding, right? This is a very advanced topic, by the way. This is a 4 days course. Just the top part is a 2 full days course and booster session quarterly. And also this one is a 2 full day, right? So this, I have 1 hour here. So I'll do my best to give you the big picture, okay? Yeah. All right, so let's talk about the first part, which is on the macro, right? So when I say overall market sentiment affected by the macro factors, so now I want to share with you the top 10 categories of the macro factors, right? This is the 40% move. And I highlight the top 3 because there's no way I can explain so many here. So I'm going to explain the top 3 at a high level first. The one, you may want to write this down. The biggest impact to stock price movement is actually money supply. What is it? Money supply. So what do you mean money supply? The amount of money that is in the world, right? So if this amount of money is growing, then this money have to go somewhere, right? So where does it go? Usually in some asset that will appreciate, right? So it may go into stock market, it may go into forex market, it may go into currency market, the cryptocurrency, real estate, commodity, and so on, when there's a lot of money. But when this money is shrinking, then you know that a lot of asset type will be shrinking too, right? Then what affects the money supply, right? It is the global monetary policy. So what do we mean by monetary policy, right? Some of you are new. Monetary policy are the policy defined by the central bank. For example, we have Bank Negara Malaysia, right? Bank Negara Malaysia will dictate the amount of money it print, right? For example, the number, how much ringgit going to print every year. And that's our Malaysia money supply. Okay, so they can decide to print more or print less, right? Shrink it. For example, some of the old notes, if they collect back, they scrap it, that's the reduction. Okay, if they print more, right, that's the increase. And the other part is whether there's a interest rate increase or reduction, right? So when interest rate goes up, it becomes less affordable, right? Less money will go into the stock market because high interest rate, people will put in the fixed deposit, right? Low interest rate, people are more willing to take risks. Okay, so because of this, the central bank policy, right, in general, we call it monetary policy, does affect the financial market a lot. And it is not only stock market, it affects overall financial market. So I monitor central bank policy a lot, and not only the US central bank policy, but the global major central bank policy. And for Malaysia, I do look at Bank Negara policy as well, because it affects the ringgit conversion, right? So what is the Malaysia Bank Negara stance on the interest rate direction? compared to, let's say, the US, that will affect the exchange rate for Malaysia. And that exchange rate can affect whether money will flow in or flow out of the financial market in Malaysia. Okay, so that's one of it. And so this global monetary policy will affect the currency market, right? This one will affect this. Okay? And it is not one country policy that affect, it is relative, right? So it depends on, let's say, if you want to talk about the strength of the ringgit, it will depend on a lot of it to do with Malaysia versus US policy. Okay, of course, we have a lot of trade partners like China, right? So the exchange rate, of course, depend on China policy and Malaysia policy, right? It's always relative. And this currency movement will determine whether people will be confident to invest in Malaysia, right? Example, if the ringgit strengthen, people will be more confident to put their money in Malaysia. Otherwise, they may invest in the stock market. They can make money from stock market. Let's say it goes up 20%, right? But the currency may decline, let's say 10%, they are still in trouble. If the currency decline 20%, then it's not worth it. Okay? Or if they cannot take out the money, right, because of the currency control, then it's also a problem, right? So a lot of foreign investors, they will need to look at the the inflow and outflow control of Malaysia, and also they will look at currency movement, future currency movement, to determine whether it's worth to invest in Malaysia. Without big fund flows to Malaysia, the stock market cannot take off so much, yeah, because there's limited investors and traders fund in Malaysia. Okay, so this is why this is so important. And on top of that, there is also fiscal policy, right? There's two big jargon here. One is monetary policy, one is fiscal policy, right? These are the two big category of policy. So this is based on the central bank, as I mentioned, monetary. Fiscal policy is the government, like central bank and the government are two different bodies. They are supposed to be independent, okay? Supposed to be independent. So what is fiscal policy? For example, if Malaysia government issue a budget, right? That budget could be in favor of certain sector, but may not be in favor of certain sector. And those sector which is in favor, you may see the stock price move up. Yeah, and those not in favor, you'll see that people may sell off those sector. Example, right now in Malaysia, what is one of the new industry, right, that are in favor right now, that the Malaysia government are supporting? Anyone knows? Yeah, data center, right? So you can see how important is fiscal policy. Just treat it as government policy, because fiscal policy can be a jargon. Okay, yes. So let's look at, I just quickly look at some of the questions here. Should FDI be part of this macro? FDI is the outcome of this macro, right? When I talk about macro, is the factor influencing the financial market. And this macro affect whether there's a foreign direct investment coming or going out of Malaysia. FDI itself is not a factor. Okay, it's not, I mean, it's not one of the macro factor, but it's affected by the macro factor. And FDI more coming in help the economy. Okay. Okay, so the Japan carry trade, I will talk about it later. It's a more advanced topic. Remind me if I forget about this. Yeah. So this one, I worried some of the beginners will be lost. I will talk about it when I have the chapter on the currency later on. I have a chart to talk about it. Okay. Yeah. All right. So these are the three. Other than the government policy, one very important aspect is the political stability. Right, the foreign funds will not come in if they think that the politics are not stable. Right, for example, let's say you always change government very fast, and every time you change government, then the policy may change. Right, just like if you change from Democrat to Republican, they have some differences in the policy. Right, so during the election year, that's why the stock market has more volatility due to that. Right, because they worried about changing policy, so people will sell off first, and once they know who wins, right, then the market will become stable back after a while, or not immediately, right? Because it will take some time for people to figure out and stabilize how they switch the portfolio. Right after election, normally there will be a lot of portfolio changes, right? Because right after, even if Malaysia or US or any country is the same, right? Let's say if Trump win or if Kamala win, okay, in the US, so they will need, the big funds will always be prepared ahead of time what they will do. Okay, so nobody will know the actual election outcome. They will do a probability assessment, but right after that, they will be prepared how to switch, right? Sell what and buy what. Yeah, so you will see a lot of movement during the time, and if you are not prepared, then you will miss some opportunity, or you may be late to get out of some stocks. Okay, so essentially these are the three major impact, the big mover. Of course, there are other aspects, for example, the economic cycle that will affect the stock market, right? So there's a different economic cycle, right? The growing economic cycle, plateau, right? The declining recession, right? Then continue to go back up. So this cycle also affect what type of stock is in favor. Of course, when it comes to recession, the overall market will be down, but usually there will be some sector in favor. So economic cycle is very important for what we call a sector rotation, right? So example, during the bad economic cycle, consumer staples will be in favor, right? Consumer staples are those essential goods and services, right? Because people still need to eat and drink, they still need to buy their essential goods, right? Their shampoo, right? Detergent, right? Those are the essential goods, and utility, right? But during good economic times, people are willing to take more risks, right? Those essential goods are the one that has a lower profit margin. They will not be in favor during the good times. So if you understand this, you will know how the sector rotate. Yeah, there are 11 sectors in the US and also in Malaysia, quite more or less the about 10 plus sectors as well, category. Then the next one is the growth in global ETF and funds, right? So we are in a stage where, especially after the pandemic, during the pandemic, I would say, during the pandemic, a lot of people start to learn about investment, right? They stay at home, nothing to do, right? So we have a big surge of a number of students during the pandemic as well. We managed to convert all our 10 courses into online. And so a lot of people learn from home. And because of that, a lot of retail traders comes in, right? And this also increase the demand. Remember, stock market is also about demand and supply, right? More people buy, then the stock market can go up. And also more ETF are issued, right? ETF, exchange traded fund. For those of you who are new, treat like a unit trust fund that can be listed, right, in the stock exchange, and you can buy and sell yourself, right? So the reason it's called ETF instead of unit trust fund is because it's exchange traded. You can trade it yourself, okay? Yeah, there's a huge search on exchange traded fund. And exchange traded fund is a fund managed by a fund manager, and people buy the fund, right? So the more these funds grow, the more fund manager have to buy stocks in the stock market, right? So if people redeem or redemption, they call it, yeah, when they pull out from the funds, then the fund manager have to sell. Okay, so far there has been a growth in global funds, and of course this is the positive part so far, right? This is positive, and this one is the negative, okay? Because there's all this Russian-Ukraine war, the Hamas war, then we have the tension between US and China, right? And China and Taiwan. All this, of course, is not good for the stock market, right? Because some instability. But no matter what is it, this is what I found out. After a while, people get used to it, okay? They will know how it impacts. Then, they just trade whatever. I mean, the good stock, which is penalized because of the tension. And as long as the fundamental is intact, people will still buy those stocks. Like, so you just need to learn how to navigate the geopolitical tension, right? Don't let it be holding you back at all, right? Then, of course, natural disaster, every one of us has experienced the COVID-19 pandemic. Of course, there are other natural disasters. One of the reasons I don't like to buy airline stock is on and off they have, all these airline disasters. Not so much in Malaysia, but in US, right, they have all this grounding of the plane because of extreme winter, okay, and so on. Or there could be flooding. They have experienced flooding as well. Doesn't affect as much of the industry in Malaysia, but in other countries, it could be, right? Then, of course, right, the natural pandemic affected China economy significantly, right? And also Vietnam, and also in Malaysia earlier on. Okay, they took 3 years, right, to open up from the lockdown. Yeah, this one I have mentioned. There's two parts. One is the growth in global funds and growth in retail traders, right? Especially all of you. So even for Malaysia, there's a surge of retail traders, right? Earnings growth, this is where the fundamental comes in. Earnings growth, this one is not for specific company, right? This is how the global economy is that drives earning growth as a whole, right? For example, the US is the largest consumer market in the world. So if US economy is good, it helps the whole world. And the second one is Europe. The third one is China, right? So China economy is good or bad right now? Yeah, anyone knows? China economy, is it good or bad now? So China economy is not, it's bad. So it's also bad for the whole world, right? Because China, the people in China are also bigger, one of the bigger consumer. They have a lot of middle income group. But if the economy is no good, that means they have less money to spend. They will buy less from Malaysia, they will buy less from US and globally. So because stock market are consisting of companies. Make sense? Stock market consists of companies that are listed. So companies, stock price can go up if a company make more money. But if there are less demand, then it will slow down. And we are in the cycle where there's a slowing down of the global growth. So this is where we are talking about the global earnings growth is slowing down right now. But if US is doing well, Europe doing well, China is doing well, then you will have a very nice stock market upside. And the last but not least is the depth or margin availability. These days we can trade stocks with margin. You can trade in certain countries. Malaysia is restricted to certain brokers. You can trade contract for difference where you can use less money to buy the stock. And there's also options. You can use less money to trade. All these are called margin availability, right? And that increase the trading volume, right? But when the margins shrink, right, the loans shrink, then you can see that less people can afford to trade. And this depth availability is not only for trading. It's also, let's say right now, a lot of people can buy by installment, right? They can buy even TV by installment. Okay, they can buy a car. In the past, I remember it's only 4 to 5 years. Now people can take like 7 years installment. House, instead of 20 years, they can go for 35 years. And that actually increased the affordability, and because of that, a lot of people can buy. But once this margin shrink, then less people can afford. So margin is also an important indicator, but it's a bit on the advanced side. So normally, normal retail trader like us may not monitor that. Yeah, but in our company, we have a analyst team that monitor all this. Yeah, because we know these are the big market movers. Yeah. Okay. So can follow so far, or is it too advanced? Just type on the chat. Okay. Okay, some of you said real estate problem, right? Real estate problem is an outcome of the macro. It is not a factor by itself. I would say it's the next level factor. Like in China, right? They do have a real estate problem. Okay. But the real estate problem is the one that causing the whole China to slow down. But the underlying also is the job market. Okay, why people cannot afford to buy property? Because they don't have enough jobs. Property price too high. Because why there's not enough jobs? A lot of companies pull off of China. Why they pull off China? Because of US-China tension. Okay, yeah. So they have all these sanction against any imports from China, right? Certain selected import from China. There's a tariff. Right? Tariff is like a tax, just like Malaysia. When you import cars from overseas, right? Let's say you want to drive a Tesla, okay, or a BMW, it's imported. Malaysia imposed tax, right? That's called tariff, right? So it's not new. It's just not just US have tariff on China. Malaysia also have car tariff, right? And to protect a local industry. So US is doing the same thing to protect the local industry. And because US has a lot of tariff on China, so a lot of the manufacturer, when they want to sell to US, they rather manufacture elsewhere, right? That's why it benefits Malaysia, Vietnam, and the rest of Southeast Asia, right? And so due to that, the people in China has less jobs, right? And when they have less job, their purchasing power go down, and they also cannot afford the property due to that, right? And and the other reason is there's a lot of reasons in China, so I won't have time. That's China itself is a 2-3 hours topic by itself. Okay, so and because of that, the real estate in China is having deep issues, and quite a number of the property developer went bankrupt, right? And the government refused to bail out all of them. So they were helping in terms of like providing loans, but they are not like totally bailing out. But real estate, right? So you can write this down. I don't intend to go to this, but just since the question come up, I just want to highlight real estate is actually a very important aspect of the economy, right? Because if real estate in the country is not doing well, that means it's not booming, it has a whole chain reaction. Okay, so let me give it in layman terms. I remember when I first left Intel, my previous job in 2008. Not before I left. Yeah, in year 2000, Intel started up Intel Cyberjaya plant, and I was one of the earlier manager to move to Intel Cyberjaya, right, to come back to my hometown. So at the time, I experienced a huge development in Putrajaya, okay, and Cyberjaya, huge development. And that was the time where Malaysia just came out from the Asia financial crisis, 1997. And so to me, that is actually very crucial to help Malaysia to recover as well. Infrastructure development. Okay? And this is one of the fiscal policy that is used by a lot of countries. Right? During China Olympics, China actually built a lot of infrastructure everywhere until the extent that they overbuilt. Okay. Yeah. Okay. So the yeah, I will need to go fast on this because this is a bit too deep compared to what I've already shared. But since the question come up, the China real estate issue has a chain reaction. Why I bring up the Malaysia Putrajaya Cyberjaya, it was one of the projects, right? The major initiative to help Malaysia recover. Because when you build buildings, what else do you need? Or when you build roads, right? You need a lot of workers, right? On top of that, when you build all the infrastructure, you need transportation. And you need transportation, then the transport need oil, right? So it also demand for oil. You need a lot of workers. After you build a house, you need renovation. After you renovate, you need to buy TV, fridge, right? Yeah, you need to buy all the decor items, right? So it has a whole chain reaction to the whole economy. So opposite also applies. If the real estate slow down, it's a chain reaction to the whole economy. Are you all following so far? Is it understandable? Yeah, type yes if you understand what I mean here. Yeah, so I attempt to explain the most layman term. Yeah, so as much as possible rather than using economic terms. You don't, if you're new, right, you don't have to understand everything, right? Just treat it as a more generic understanding. Okay. You can also trade based on stock chart first when you're new. Okay, you don't have to get so complicated. Okay, so let me move on. So this is the big picture affecting the economy. All right, so why do we need to understand this, right? This is for the big funds, right? This is how they think. Okay, this by itself, today's topic is classified in the Bursa Malaysia webinar as an advanced topic, right? So you may find overwhelming because you straight away jump to advanced, okay? Yeah, but I still encourage you to listen. So why this is, I think I go upside down. Yeah. All these macro factor affect something called money flow. And all the big fund manager, right, they study all this, right, because they need to know where the big money is moving. Okay. This is actually under a pretty advanced topic, but I will not go very detailed, but just give you a flavor. What do I mean by money flow? Example, there's a limited money supply in the world, right? And this money have to go to either left pocket or right pocket. Okay, there are many pockets here. So what are the pockets? They can either stay in cash or they can either stay in money market. So what is money market? The layman version of money market is anything that gives you a fixed income. Okay, so what is a fixed income? For example, your fixed deposit. Like that's the closest example to the money market. Like, so you put your money in the bank give you a fixed deposit. Okay. Sometimes if you go into other aspects of money market, between the banks, they have the short-term money market. They can give you slightly more than the standard FD. Okay. So when people are uncertain, then they park the money into the money market first. Like if you stay in cash, you don't get interest, right? Put in money market, get some interest. Or sometimes the money may go into digital currency, like that's crypto is very hot these days. Or they may put into stocks. They also have a choice to put into bonds, right? Bonds also is can be advanced to some people. Bond is also a fixed income instrument. Basically, when you buy bond, right, of a company or the government bond, you're like lending you buy government bond is you are lending money to the government. Government pay you a fixed interest rate. At the end of the duration, right, of the bond, then the government return you back the full amount of your principal. So you get the principal at the end of the term and you get a interest, what they call coupon. Okay, so people can also park money in a bond, and a lot of insurance company, they like to put into a bond, like or EPF, right? Fixed income, more secure. Provided it's a reputable bond. Okay, then derivatives are like options, they are called derivatives. CFD are derivatives. Then commodities, like if you can trade oil, right, gold, or coffee, those are commodities. And of course, real estate, right, properties and so on. Right, so you see, money can go into so many places. So there is a principle behind how money will move, right? In the the macro factor just now are the one that govern where money will flow. Okay, this is what big fund managers learn and think. But usually this is not what individual traders will do, right? Individual traders, what you can start with is more within the stock market rotation. That means here, right? During different economic cycle, maybe originally is from the high growth stocks, tech stocks, and so on. But during bad times, they may move into consumer staples, utilities. When the times are good again, they go back into the high growth stock, right? And so on, right? So usually, if you are at the intermediate level of stock market, you may focus on sector rotation first, right? This whole thing is called asset rotation. Within the stock market, it's called sector rotation. Okay. Then the other one more bigger picture is called the global money flow. That means it's not just within the Malaysia rotate among all these assets, because within Malaysia you have all these assets they can rotate, right? So global money flow means where the money move to, right? Is it to the US? Is it to China? Is it to coming to Malaysia or Southeast Asia or the Europe, right? That's the global fund flows. Okay, so I think if you're retail traders, you don't have to worry too much about this, unless you're already at the advanced level. Okay. All right, so that's the macro part. So it took me a while to cover the macro. So the next one is the mega trend, right? Remember that's the 40%. The next 30% is the mega trend. So the mega trend is usually on the big industry mega trend. There are many industries, but these industries are moved by a big team. Okay? Megatrend are the big team. So what are the megatrend? I think a lot of you heard about AI, right? AI is actually a very big topic. This itself I can cover 2-3 hours. Okay. Then there are other megatrends like cashless society, big data, next generation connectivity like 5G, 6G, satellite internet, right? Virtualization. Virtualization is the Apple Vision Pro, right? And also Oculus, right? Those are virtualization. One aspect of virtualization, but there are many aspects of virtualization. Clean energy, part of it is solar, part of it is EV, right? And there are many aspects of this. These are the big team. And this big team drives the next level industries. Okay, example, the AI, right, drives a lot of the next level dependency like cloud computing, right? The hardware, the software, the networking, and so on, right? So when I say mega trend, that means these are the pervasive trend that can last more than 1 decade. 1 decade is more than 10 years. That's why they're called mega. They're not just small industry trend. So if you understand the big industry, you may not need to worry so much about, I won't say you don't need to worry. You can really capitalize on the understanding of this, where you can enter the mega trend when the market pull back due to macro, right? Let's say now election fear, overall global slowdown, but you know that these are the mega trend. The pullback can be your opportunity to enter the mega trend. Because why is it called mega trend? Mega trend means these are the areas where there's a huge demand. So when there's a huge demand, even though there's a sentiment bad, it's just temporary, the demand will come back. Okay, if you can understand the cycle, then you will have confidence when people are fearful. Okay, will mega trend create bubbles, right? Yes, when it go up, anything go up too high will also be bubble. Okay, that's why you also need to understand the next level, which is the company level. Remember, there's a macro, there's a industry mega trend, and there's a company level. Before you invest in any company mega trend, you need to understand, are you paying too much already, right? Is the current stock price already factor in all the future growth? Okay, right. So now let me move on. So that's the essence of the 40, 30, and 30. Okay, I think the remaining 30 you already more or less know, which is the stock part. So I won't go into that. So let me sum up as to the problem of where most people start with company level fundamentals. So let's say you don't follow this big picture, right? What will be the challenges? Okay, so these are some of the negative impact of this approach. The first one is you could be holding on to a stock even though the macro and industry are no longer supportive. Okay, I have an example on the next page. Later I'll show you. And you may be overlooking the currency impact on the import-export prices that may affect the company that you're investing. Okay, because you don't understand the macro. Then why ringgit becomes so weak over the past many years, right? When the ringgit become weak, it could be positive to some company, but it could be bad for certain company. And in general, it's not good for the whole Malaysia stock market, right? When the currency is weak. And the third part is this currency impact may cause global fund flows out of Malaysia. Okay, now we have the opposite side where Malaysia ringgit strengthened, right? So the money come back. Okay. Yeah. Then so for example, during the 2014, US dollar strengthened significantly, right? And also so happened at that time we have the 1MDB issue. So we have the two issues together, which caused the funds moving out. Okay. Fortunately, right now we have funds coming back in. And lastly, you may overlook the global supply chain impact on the companies because the certain industry has a dependency, right? So let's say you invest in a tech firm in Malaysia, okay, or semicon company in Penang that supply to other global semicon. Then there's some part of the supply chain of semicon is stuck, and once it's stuck, the final product cannot be delivered. Okay, so even though there's a demand, cannot be delivered, everyone in the chain will be impacted. Okay, so this is the second level for the industry dependency. Right, example, right, when China and Vietnam was locked down for a prolonged period due to COVID, right, many companies' supply chain was impacted, and which caused a high inflation because supply is lesser, demand is still there, caused high inflation. So the last couple of years, the inflation is not only caused by money supply. Remember I said money supply is a big mover. US and central bank in the world printed a lot of money during the COVID-19, right, to save the economy. And this money went to the stock market. That's why stock market is so bullish, right, for the US and Europe during that time. However, during that time also we have, and it caused inflation. But that's the money supply is not the only one causing inflation. The second big item causing inflation is the China lockdown and also the Vietnam supply chain impact. Okay, so fortunately right now we don't have the issue. China has oversupply of factories right now. Okay, so now the last part is overlooking the mega trend, right? So you have missed opportunity. You're late in AI, late in cloud computing or clean energy, right? So now you're going into the late game, which is the riskier one. Okay, so you need to be careful if you're entering right now. All right, so these are the text part. All right, so I'm not sure whether how many of you are familiar, right? So this is a normally sensitive topic. Whenever I talk about this talk, it could be a heartburn for some of you. So I hope you have got over that emotions. So I'd like you to reflect based on what I have shared for the macro and industry, and even the, you need to look at the company level impact as well. What are the lessons from this talk? How many of you are aware with the problem of top growth, right? There are a lot of Malaysian investors that are still keeping this stock, because I know that, right, some of the students, they trade Malaysian market, right? Then they attended a course and they usually ask, should they get out of this? And even sometimes I did public seminar, right? This is a very common stock that people will bring out to me, like Top Growth and Harta Lega and some other stock like Genting and so on. The very important part is this should not be an afterthought, right? You should already think of how to get out before you get in. Right. So what do you think is the big problem of holding on to this stock? What has changed? At the macro level, what has changed? Like, do you think this stock will come back to the top level someday? Do you think it will ever come back to here? No. Yes, the big part is COVID is over. That's the macro part. Okay. And the COVID caused huge demand, right? It's about demand and supply. The demand is over. But you see, many people still hold on to this stock. What's the reason? Right? Even if you don't know anything, there's a technical analysis, right? Break support, okay? Break this level. Some of you may not be familiar. This is a weekly chart. Okay, break this support, you need to get out. All right. There are many ways to work on the technical analysis. And as long as it's downtrend, you don't get back in. Right? So the problem is a lot of people, they bottom fishing. They thought this is a low, right? They keep top up, or low, they keep top up because they always reference the high. Right? This is not the right way. Okay, this is on psychology already, right? Psychology and money management. But at the industry level, other than the demand problem, China has increased a lot of factory because of the pandemic. They increased a lot of factory, and those increase the supply, and their growth are cheaper than Malaysia growth, right? So that's the competition level. So there are so many factors that change, but because a lot of people don't take note of this, right? They may hear say, oh, top growth is good, right? They just buy, they don't understand what is going on, and they don't think about where I should get out, how I should get in, how I should get out. Whether if you don't know anything, at least you use technical analysis. Okay, so then there's one way to help solve. How do you know you could get back in? You have to ask yourself, is the growth still intact, right? Of course, this is no. Then your money can get stuck here for a long time. So the problem is on psychology, right? People say, oh, but let's say someone buy here. Okay, let's say they bought here. They chase out the market. Then here they didn't get out. Then the lower it goes, they say, oh, I already lost so much. How to sell? Then lost some more. Then how to sell? Lost some more. So the psychology is a lot of people think that I must always get back to the break even, at least to this level, before I can sell. So I feel better. That's the wrong way to do it, right? The right way is you just cut if the future is no longer intact. The things have changed. You better find a new company. What do you think? Would you find a new company you research from scratch that has a good growth opportunity? Would that recover your stock faster than to hold on to this stock? What do you think? Yeah, move on, right? You find another stock. That stock can recover for you. Don't use the same stock to recover. Okay, so that's trading psychology. I won't move on. So the third part is I want to cover the case study for the macro and megatrend influence of Malaysia stock. This is the last part. Okay, so this is a bit advanced. On the top part here is the Bursa Malaysia KLCI index. Okay, so this is the KLCI index. And this is a monthly chart because I cannot squeeze so many years. It started from 1993 when I started trading. I started trading in March 1993 when I had my first job in AMD. Okay, trade Malaysia market first. So at the bottom here, you can see it's USD MYR. Okay, I compare the top part is the Malaysia Stock Market Index, KLCI. The bottom is our ringgit. So you can see how highly correlated is the ringgit versus the stock market. Okay, of course, the currency is not the only factor. Okay, so there are multiple factors. Right, so let's look at this. During the 1997 financial crisis, our ringgit actually weakened a lot. That means USD/MYR, right? So this is plotted. You can see that when it goes up means US dollar strengthened against the ringgit. So this was around 2.44 before the surge. And it went up above 3.8. In fact, the highest at that time, right, was 4 point something, yeah? After that, it settled down at about 3.8 because Malaysia government at that time, to Dr. M, he decided to pack it, right, with the advice of our Bank Negara, pack the currency. Means the currency won't fluctuate, okay? It will be the same, and it was packed for many, many years to stabilize the economy as well as the import-export. The currency fluctuating like that is very bad for import-export, okay? So they have to freeze this. And during the time when our currency weakened a lot, the stock market came down. Let's look at this percentage, 79%. They call it don't play. Like, don't underestimate how much a stock market can go down. Like, during this period, I personally experienced this, okay? Yeah, understanding. So fortunately, my account is small at the time. Yeah, because I just started not too long. Yeah. And it was a very important lesson for me, right, to understand how bad the stock market can be. And even the most secured unit trust at that time, so-called the savings fund, dividends fund, also go down 50%. Okay? You may have said that why does the fund manager don't get out for you? If they get out, the market will crash more, right? If they sell at that time, how many retail traders can afford to buy? What do you think? Right? So you need to understand this about unit trust fund is you don't expect that the fund manager will cut loss for you, because if they cut loss, there will not be enough retail traders, right? So you can sell it yourself, but you need to have the understanding. Okay, yeah, otherwise it will take many, many years to come back, which is, look at this, right? It took how many years? This is 97 crisis, 10 years to come back to square one, 10 years, okay? So don't hope that it will come back kind of attitude. You need to cut, all right? So the question is, will money market crash? No, money market is a fixed income instrument. It won't, unless the bank go bankrupt, okay? Otherwise, you can get back your money, okay? Yeah. All right, so let me finish off this. Then if I have time, I can cover some Q&A. Yeah, I still have a few more slides. Okay, so this is to share with you the correlation. After that, Malaysia unpacked the currency in the around late 2005 to 2006, right? And that was when Malaysia government felt more confident that we can unpack and the currency will strengthen back. Okay, then the stock market rallied during this time because the ringgit strengthened. You can see US dollar dropped against ringgit means ringgit strengthened, the stock market recovered. Unfortunately, doing here is 2008 US financial crisis. You may think that it's US financial crisis. What has it to do with Malaysia? Actually, anything that happened to US, right? The big things that happen to US affect the entire world. So even though you trade Malaysia market, you also need to understand what happened in the US. Remember, the big money is in a big move, right? So the US money supply, US economy affect the whole world because they are the largest consumer spender, right? And US dollar is a reserve currency. So it affects the whole world currency exchange. So during this time when US economy dropped, also affect the demand for the whole world. And that's why even Malaysia market also came down by 46%, right? At that time, usually when the market is bearish, people go for safe haven, right? That means they stay in cash, so they go to US dollar. So US dollar strengthen. Yeah, you can see here US dollar strengthen back, and ringgit go back to the exchange go back to 3.8. Okay, after the crisis, US printed a lot of money to recover the economy, right? Then the whole world also recovered at the same time, yeah, including US and globally. And this is where our ringgit strengthened back. However, this is the part that I mentioned, right? In 2014, the US dollar strengthened back again against the whole major currency. And on top of that, we have the 1MDB issue during that year. So it caused a lot of concern and the funds moved out of Malaysia. So this is where we have the dip here. After that, Malaysia market was stagnant for quite a while, yeah? And you can see that in 2018 onwards, right? 2018 onwards, because our exchange rate has been kept at very a weak level for many, many years. While the exchange rate is weak, our stock market cannot take off. You see, it was declining. And stock market is also relative, right? If you're a global fund manager, you look at where do I put my money, right? Local fund management, they will look at local, unless they are having a global fund. But if you're a global fund manager, you can move to different countries. So that's the reason I cover the macro aspect for you, right? And the asset rotation, they say, if I have this fund, where would I move the fund? Okay, I will move to the fund with the currency that is strengthening, strong economy, and the stock market has a lot of choice for me, right? That's where the funds will move. Okay, so and when that market become too expensive, then we start to move to the market that are more reasonable price. So these funds will rotate with a certain mechanism. There are many factors, okay, including all those in the first page, right? Yeah. So this is why if you don't understand the macro, your money will be stuck here for a long time in the Malaysia market, right? Understand? Yeah, now it is in favor, right? The good news, finally, after so long a wait. How many of you are happy, right? After so long a wait, finally Malaysia market move, right? Because our ringgit strengthening back and quite a lot of macro element is more in favor right now. Okay? Yeah, so understanding. So now do you agree that understanding the macro is important? Right? Otherwise, you don't know why your money is stuck there. You know, you thought you choose a good stock, but why is it still sideways? Right? Yeah, you could have invested in either the sector in favor or the stock market that's in favor or the asset type that is in favor during that period. Okay, but I know this is a bit advanced. Like you just need, if you're beginners, you just start to learn the basic first, right? So let's look at the all this drop here during the 2018, right? Malaysia market dropped 36%. Okay, now it's in the verge of recovering. All right, so let's look at the this drop. Yeah, on top of the US currency strengthening is also the COVID-19 crisis. Okay, COVID-19 crisis caused the global drop. But during this period, those countries that printed money like US and Europe, the stock market went up a lot due to the money supply. And also due to a lot of tech companies there, right? It was in favor for the tech. Again, you can see the money supply, the macro part was in favor for the US and Europe at that time, and the industry, right? A lot of people stuck at home, they need automation, right? They need laptops. So the demand for all these tech stocks was high at that time. So it surged quite a lot. So you need to understand the cycle will change, right? After the big, huge up. So if you can understand this factor, then you know where your money should be, okay? So I need to speed up due to time. So now, what causes the Malaysian market recovery in the last 1 year? I'd like you to participate, yeah? Okay, so this was the time around July last year, right? It's the inflection point where the US at the verge of having a better control of inflation. And we know that it's just a matter of time. They will not be tightening, right? That was the time where we know that they will not increase already because it's already 5.5, right? So US unlikely to increase it to the next level so fast because it will be a big impact to the US economy. So by even freezing, even not declining, it's already a relief for a lot of the country's currency. Okay, and now this year is where we are at the verge of the next September. Very, very, very high chance, I would say, right? Very, very high chance, because it's all in the media already, right? 0.25 reduction in interest rate, if not 0.5, right? That's already factored in the stock market already. Okay, so that's why it helps the Malaysia currency. On top of that, we have the FDI, foreign direct investment, coming to Malaysia because of the macro factors are more in favor right now. However, how high more it can grow, right? Depending on our Malaysia GDP growth moving forward. Okay, because I will share with you next. This one you can actually read on your own. There's a lot of, you can do Google search, data center expansion. Malaysia still have a lot of development on the energy to cope with the demand for data center, right? In the KL region, the Cyberjaya, and also in Johor. Johor is supposed to also serve the one in KL is to serve Malaysia primarily. The one in Johor is Malaysia and Singapore, and it needs a lot of power. Singapore's supposed to have a lot more data center, but they realized they don't have enough power source, so they rejected a lot of data center because of that. Yeah, we have a coach in Singapore as well, so he was sharing with us a lot of the Singapore aspect of it. So Malaysia have this opportunity, and there's still a lot of power plant to be built, right, to cope with this demand here, right? However, you need to understand that a lot of the stocks has really gone up a lot. Okay, like you can see here, the data center market from 2023 to 2029 still have a long room to go. Okay, and this is and also the construction, right? So one is to build a data center, you need a lot of construction as well, right? You need power, you need utility, you need transportation. Okay, so this is a summary of how the AI megatrend influence the Malaysia stock market. Okay, this data center is just one part of megatrend, and cautious not to chase the market. Okay, these are some of the example of the stock. You can actually plot this, right? Give you the ticker. You can take a snapshot of this. Yeah, because I may not have time to go through all the stocks here, right? Because of this data center expansion, it helps the utility industry like YTL Power and Tenaga. I want to cautious, this is not a recommendation to buy. A lot of these stocks are really rally a lot. Like, in fact, you'll be late to this. So you need to study the fundamental to look at the valuation to make sure that they're not overblown. Right? Yeah. So a lot of this went up more than 100%. Property are also involved in the data center construction, and also Sunway, right? Also property market normally recover when our economy is recovering better right now. Okay? Technology involved in the cloud computing, SNS, and industrial product. Okay, power well. Yeah, these are some of the stocks, and yeah. So let me just pick some of this to show. Yeah, you can see here CPI. So before I move the page, right? Yeah, the CPI was positive, right? Okay, sorry, CPI went down, but look at the SPY right now. It's actually down. I know that I need to do this presentation. So yesterday I hedged my portfolio with put options. Okay, so just in case anything can happen. Yeah, otherwise I'll be shorting the market right now. This is where you can short here, buy back here, can make money in trading. All right, so now let me show you the Malaysia stock first, Tenaga. Right, so this is let me hide some of my lines. So you can see Tenaga was bullish start from this inflection point. But Tenaga was affected by not just the macro and the data center, is also benefiting from the rates change. How many of you get the notice from Tenaga about the rate changes to our electricity bill? Anyone heard about that? Do you actually look at your electricity bill? Look at the media. They also benefit from the rate hike. Okay, so double. Yeah. So from here to here, let's look at, from here to where it is right now, it's already 56% in about 1 year plus, right? So there are so many stocks in Malaysia, right? About close to 1,000. Like, how do you choose, right? So if you understand the mega trend, there's one area that you can start first, because mega trend is where there's a demand. However, if the mega trend, the main one, already rallied a lot, you may need to look at the subsequent dependency, right? The sub-industries of the mega trend. and you check whether the chart has rallied. So Tenaga is more sustainable in the sense that it has beyond just the data center, which has gone up a lot, but it also have the rate hike in favor. And from the slide just now, you can see there's more power plant, right? Yeah, but make sure that you have proper stop loss. Right? For me, no matter what is my view, I have a stop loss. Okay. Yeah, either that or use options to hedge. Right? So you need to make sure that you have that. The next one is you need to know what is also affecting the company beyond the industry. Look at YTL Power. You can see totally opposite trend because it has rallied too much. Right? This is where you can can be a time bomb, right? From here to here, right? Let me just remove this first. From the 2023, right, where the initial recovery happened, you can see before that YTL is like flat. Yeah, we call it like no heartbeat. A lot of stocks can have no heartbeat for a long time. Your money can get stuck there. And before that, it was even declining for many, many years. Right? At this inflection point is where it take off. Okay, so it's 609%. Okay, but now you're already late. So one very important question you ask yourself: if the stock has gone up 609%, did the profitability increase by 609? If the answer is no, then it's just a time bomb, right? Is where the people will start to sell. It will become overvalued. If let's say the stock has gone up like 100% and they actually has more than 100% earnings increase, then it can become more sustainable. Understand? Right? So you need to study the company fundamentals, because today's topic is not about studying fundamentals. It's about the big picture. To study those stocks that I mentioned there, or could be other stock, before you enter anything, right? So this is still on the sell-off, and they also have another investigation going on, right, on the company. Anyone is aware? YTL Power is in investigation going on the company accounts here. Okay, yeah. So, and even if you start early this year, right? Even if we count early this year, still 13%. Okay, so it has actually gone up. So the big guys already make the money, right? So who do they sell to? Sell to the people that are coming in the late wave. So be cautious not to be caught there, right? And don't just look at the news, right? Sometimes news are created so that there's a hype, then people want to buy, and actually other people wanted to offload. Okay, so make sure that you have risk management. You look at the chart, it doesn't look right, you just sell, right? This is depend on what technical analysis you learn. Right, so it's just one form of it that you get out when the break the support. Okay, yeah. Then I'll just show one last one on the SNS. Yeah, Sunway. Right, like Sunway, right? It has also gone up by 172%. Right, so go and study the company fundamentals and see, did Sunway profit went up 172%. If the answer is no, then it's doesn't justify the price. Right? Look at the valuation as well, because it could be undervalued for a long time when Malaysian market was sideways. Okay, so you need to understand. And moving forward, you need to study the company to see where is their growth coming from already, because the current price could have factored in the next few years' growth already factored in. Okay, so you need to look at the company fundamentals. Okay, I won't have time to cover this today. Right, today's my last topic in the Bursa series. Okay, all right. So I think based on time, I won't have time to cover more. I will just go through this last part first. Right, you can check out the others, right, yourself. Right, so in summary, this is a more strategic approach to the stock market, although it's more advanced. Why is it important as you mature in the stock market, right? Not when you're new. As you get more and more experience, I see that quite a number of you are more experienced. It will be great for you to understand this. When you understand this, you can catch the big trend. Even though you don't trade a lot, you just catch a few big trends. It's big money for you already, right? Rather than getting busy in, out, right? Or your money stuck there. But it is a steeper learning curve, right? If you approach it yourself. It took me many years of experience, like 30 years, because I like to understand the why and everything. So I did a lot of research in this. So that's where we help our students to shortcut that, in our program for the macro insights and industry insights. Okay. So remember, look at the mantra. The big money is in a big trend, right? So understand what drives the big trend. Then, therefore, it's essential for you to understand the factors as you get more experience. And more important warning, if you miss the big trend, the data center trend, don't chase it. Okay, wait for the pullback, right? Don't be FOMO. Look at the stock chart. As long as trending down, don't buy on the dip. Wait until the trend reversal happening and gradually buy on the way up. Okay. Then do your due diligence so that you prepare. It doesn't mean you don't look at those stocks. They are still great company. Do your due diligence, analyze it, and just wait for the appropriate entry. Right. For the meantime, you can check out other stocks first rather than stuck at this. And remember, success in trading requires a systematic approach. You cannot be so random, right? Your friends say buy this, then you chase that. Then people already read it so much, then you go and buy it. You must have a structured process. Okay. So what is a structured process? Like for ours, we have a framework. Okay. So what does it take to be consistent in trading? You need to understand your thought process. Okay. What I cover with you is a more advanced top-down process, but it can be simplified. Right? Our beginners level is you just start with growth investing and trend and swing trading, more simplified for you to start step by step. Right? But the complete framework will help you to handle any market condition. Right? So we have something called a SVS framework. No matter what you trade, right? Like you to think about, do you have a systematic approach? Whatever strategy you use, think about how to systemize it. Right? Do you know exactly what is your thought process? Like how do you select stock? Like how do you time it? How do you protect it? And how do you multiply it? Right? So we call it STPM, select, time, protect, and multiply. That's how systematic our system is. And are you versatile? Does your method able to cover in uptrend, can trade in downtrend, and in choppy trend? Okay. And the last one is, do you have a protection? Right? What is your money management approach? Do you have a stop loss? Okay, a risk threshold per stock, and also do you have a risk for a portfolio? Right, in case everything goes down. Let's say today bad news, then everything goes down. What is your max risk? And the way you implement that, there are many ways. One is you can use hedging. The other one is use stop loss, or limit also the number of units you buy. Right. And last but not least, you also need to have the psychology to follow it, right? So no matter what people teach you, if you don't follow it, you just follow your own way, you don't cut loss, nothing works as well. Right? So this is the key summary I want to have for you. Remember, systematic is the key to repeated success, so that you don't panic after you get in. Oh, how to get out? It's become an afterthought. Before you get in, you must really know where is your get out point. How do you move up a stop loss? Right? How do you take partial profit? Right? And also, how do you handle different market conditions? When you're new, just focus on a systematic, simple process. When you get more experience, you learn how to handle different, more challenging conditions. But for beginners, most important is to have it safe, right? You must have an exit point before you enter. Okay, that will keep you safe, systematic and safe. Start with a simple approach first, right? Then this will help you to have a sustainable result, and that's why you can grow your wealth safely. Okay. All right. So now I've answered some of the questions really earlier because of time limitation. So not sure if there's any heart-burning questions I can.
Yeah, I think due to time constraint,
today,
we'll just address one question.
yeah,
okay.
one question. Yeah. So some of you, I just want to make sure the beginners don't get set off. We will not encourage you to stock market that. The stock market too complicated. Don't get me wrong. It took me 31 years, right, to master a lot of this. We do have a simpler one for beginners to start off, right? So like if you look at the chat there, if you want to start with a simpler process for beginners, we do have that. Okay. All right. So let's see what is the one question that we can take.
Okay.
Any idea? Yeah.
So the one question that I picked from the many questions that I received is that there are a lot of fears on the US recessions, possible US recession. So the question here is, may I know your opinion? Will it happen? Yes.
Okay.
When do you think?
Bear in mind, it's just my opinion. The market is very dynamic. Okay. My views is I've been trading the US stock markets for so many years, right? First of all, this fear of recession, you have to understand where it comes from, right? The recession fear comes from US alone, right? The Federal Reserve can still do something, right? Because if it's related to a demand issue, you may want to write down this a bit, need understanding. Anything to do, normally when it's a recession, what does it mean? Low demand, right? People don't have enough money to buy. There's certain thing the US government can do to solve this, right? Which is they reduce interest rate, and which is what the Federal Reserve is doing. They have a lot of room to cut interest rate from 5.5, right? Let's say next week they can decide to cut, instead of 0.25 expected, they may cut 0.5. Okay, they can cut it faster, so that the housing loan becomes cheaper, car loan becomes cheaper. But it will take some time for it to take effect. It won't be immediately people become richer and can buy stuff. So there could be some short-term pain before it can recover back when they take this action. Okay, so as long as it's a demand issue. But when it's a supply issue, then it's different, right? For example, to control inflation, the Fed cannot just raise interest rate. If there's not enough stock, then no matter how they raise the interest, people can still, there's still not enough supply. Okay, so this is why I'm so confident that as long as there's a demand issues and there's a lot of room for the US government to reduce the Federal Reserve to reduce the interest rate to activate back the economy, then they can revive, but it may take a few months of short-term pain, right, before the lower interest rate take into effect. However, our bigger problem right now is not about US. US can do this, right? And the next president can also do something to activate the economy, because all presidents have to do that to keep their people happy, right? Yeah, they can have stimulus. And US has the ability to print money compared to any other countries. At worst case, they just print back the money, okay? But what I'm more concerned is the global economy. What I'm more concerned is China economy, right? Because China problem is harder to solve. Yeah, China has a jobs market problem, and it cannot just create jobs like that, right? They are doing, they wanted to activate internal consumption, but that would take many years. They are solving the problem. I think in the long run, I think they will recover, but it may take them 5 to 10 years gradually. They have a huge graduates unemployment right now. Okay, as long as there's not enough jobs, people don't have enough purchasing power. And as a continent, US is #1 consumer spender. Come after that, Europe, then China. But as a country, not continent, China is the second largest consumer spender. Right. So what affect Malaysia and also US will be China, because US has a lot of companies selling to China. But there will still be enough consumption within US, right? There are some companies that are just within US, like Walmart, right? They only sell to US. As long as American can buy, then you can buy. So don't be too worried, right? Because in any recession environment, there will still be companies that are making money. Okay, so you just need to choose those stocks. Don't be so fearful about everything. And the good news is, you can trade up or down. Okay, yeah. So the reason I'm not fearful about this is you just trade down when the recession comes. You can selectively, consumer staples, utilities will still do well in a recession. And I'm confident that technology will still have demand, right? Right now, the technology stocks are coming down already, right? It has a pretty good valuation, right? People are just waiting for after election uncertainty, they may get back in. So I'm actually standing by for that, okay? Because even for Malaysia, right? You have all these data center stocks that are elevated right now, right? It just need to correct to a certain level. After that, you can still get back in. Make sure that you confirm the technicals and have a stop loss. Yeah, I mean, just my views, right? People say that US may end up as the recession. The possibility of a soft landing is there, but if you look at all the JP Morgan Stanley, right, it's still lower than 50% chance. Right? And the Fed can solve this. The Fed can solve this by lowering interest rate. Worst case, right, you know that Jerome Powell can just add back money supply, just print money again. Right? The US government can just have stimulus again. Yeah, that will activate the economy, but that's within US consumption. Right? Global consumption is still weak. Based on the overall central bank, overall global forecast, next year there will be a slower growth throughout. Right? They just revised down by 0.1. 8.1, not too bad. So we just expect slower growth. Slower growth doesn't mean cannot make money. A lot of the companies are still have pretty good margin, at least those that I traded so far. Okay, I'm not sure whether that answered the question, but that's just my view. Depends on all the new things that happen. If there's another war, that things can change. Okay, yeah, and I won't talk about election. Election is another big topic, right? We just have the US debate right now. Seems like Kamala is leading right now, and she wants to impose tax. Yeah. So just find those sectors that is in favor. Okay. Yeah, there's always a choice. There are so many stocks to trade. Don't worry about it. No matter even the whole stock market come down, normally there will be still some that you can trade. Okay, so don't be too fearful. Learn it first.
All right, so that's all the time we have for.
Yeah, just forgot last part. The worst thing, right? You cannot keep anything overnight. Trade intraday. Okay, don't keep anything overnight. Today, don't care what happened tomorrow. Just trade. Today, up, you trade up, down, you trade down, and that's it. All right.
Yeah, need to be versatile,
hope,
right?
this helps, and this will be my last session for this year. So I'm glad that I can impart some of my experience to all of you, and I hope it doesn't get all of you overwhelmed. Yeah, do type, give us the feedback on this webinar, and you type on the chat whether is this something that you find useful, or is it too overwhelming for you? Just type on the chat. At least I get some feedback before I leave here. Yeah. Okay. Good. Thank you. Yeah, I'll pass back to Shane then. Yeah.
All right, so that's all the time we have for Q&A with Kathlyn. Thank you so much, Kathlyn, for sharing with us your insights and your approach, right? Your strategic approach to the stock market, where we've learned about top-down approach, where we begin with macro, go into industry, and go into the company specific performance indicators. So, ladies and gentlemen, you just heard from the chief trainer and founder of Beyond Insights, who is Ms. Kathlyn Toh. Thank you so much, Kathlyn.
Okay, you're welcome. Yeah, thanks for inviting me for this session. Yeah. Okay.